Thanks for staying with us. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. I am BC Adebayo. On the program today, Rwanda's telecom industry regulator fines MTN Rwanda $8.5 million for running its services outside the country in breach of its license. Plus, the Zimbabwean government announces plans to build a $200 million platinum refinery next year. And the International Monetary Fund says Egypt is expected to receive the second loan installment of $1.25 billion within the next few weeks. Well, let's get the show started, and we begin with the markets here in Africa, where all the numbers are in the green except the Egyptian index, which was seen 0.67% lower at intraday. Nigeria's all-share index maintains its upward movement at intraday with a 0.49% gain. The Johannesburg Stock Exchange was also up 0.35%, while Kenya closed 0.67% lower on Wednesday. And markets in the Middle East are all in the red at intraday, as members of the MSCI Emerging Market Index were also weak in Abu Dhabi, with First Abu Dhabi Bank and other properties each dropping 0.9%. The index was down 0.27%. Dubai's index was down 0.5% as most of shares that are constituents of the MSCI Emerging Market Index dropped. In Qatar, all 11 of the MSCI Emerging Market Index shares were down, with Commercial Bank declining 1.6%. Well, Saudi Arabia's index also declined 0.07%. U.S. President Donald Trump is due to visit Saudi Arabia in the coming days, and some investors hope deals could be signed between Saudi and American companies in the mining, energy, auto, and defense sectors. Let's head to Wall Street now, where stock index futures pointed to a lower open today on concerns about President Donald Trump's future and his ability to deliver on his pro-growth agenda. Futures for the Dow Jones Industrial Average fell 100 points, while the S&P 500 and Nasdaq futures dropped 9.25% and 19.25% respectively. The Dow lost 370 points on Wednesday, recording its worst day since September last year. And Asian equities lost ground today, while U.S. futures meandered amid a U.S. political turmoil accelerated with the appointment of a special counsel to take over the investigation into Russia's involvement in the U.S. presidential election last year. In Japan, the Nikkei 225 dropped 1.32% to end at 19,553.86, weighed by a surge in the safe haven, that's the yen. South Korea's Kospi shared 0.18% to end at 2,228.85, and Australia's ASX 200 dropped 0.82% to 5,738.3, extending Wednesday's 1.1% fall. Hong Kong's Hang Seng Index declined 0.66%, while the Shanghai Composite shared 0.45%. The Shenzhen Composite was down 0.63% at 1,855.99. Well, we're staying with the markets, but this time at the commodities segment, where oil prices dipped today, weighed down by supplies, despite an ongoing effort led by OPEC to cut production in order to tighten the market and proper prices. Brent crude futures were down 21 cents from their last close at $52 per barrel, while U.S. crude futures were 48.88 cents a barrel, and that's down 19 cents. A research analyst at financial derivatives company Adim Okwesa joins me now to talk more about the market. Hello, Adim.
Hello, Bisi.
So, in spite of the volatility seen lately at the crude oil market, it appears it has steadied slightly above $50 per barrel. What's driving the market at this time?
Well, it's a combination of several factors. First, we have U.S. inventory. The Energy Information Administration reported yesterday that U.S. crude stockpile declined by 1.8 million barrels, which is quite modest at this time of the year. Then, secondly, we have lower U.S. production and also lower production in Venezuela. The U.S. production in the U.S. declined for the first time in 13 weeks, which came as a surprise to the market. And also, regarding Venezuela, the country is going through a very tough economic crisis, and as a result, production has taken a very severe hit. And also, the dollar has weakened in light of the ongoing political mess in the U.S. So the combination of these factors is what's driving oil prices currently.
Now, considering the ongoing political turmoil in the U.S., just like you mentioned, now, do you think that oil demand will also be affected?
Well, I think it's a big risk, which surprisingly the market has ignored. I think the International Energy Agency reported earlier this week that demand might not be as strong or supportive to the oil market this year. And if we add that to the uncertainty about the political environment in the U.S. and what type of policies would come out of the U.S. to support economic growth, I think it might be a very big problem. And what is even more concerning is that OPEC and other oil producers can control supply, but they can't control demand. So it might be a very big problem. But on the plus side, I think the dollar has weakened by about 2% this week. And I assume that if this controversy continues, the dollar will continue to weaken and it might support oil prices.
Now, some analysts also say that oil supplies would likely remain plentiful. That's despite an extended cut, particularly with the rate the U.S. is going. What's your opinion about this?
Well, I think it would be very difficult for OPEC to tighten the market, considering the threat of U.S. shale production. If we recall, in November, OPEC came out and said that it would take 6 months to rebalance the market. Now it has come out and said that it will take another 9 months to rebalance the market. I think that just shows you how strong of a force U.S. shale has been, and I don't think OPEC anticipated it. And what is even more concerning is that these producers are able to find even more cost-effective and cost-efficient ways to produce oil. So it might be very difficult for OPEC to tighten the market by the end of Q1 18. We have to wait and see how it plays out.
Well, while we wait and see how that plays out, do you have any outlook as to where, if the price is likely to remain around $50 per barrel in the coming days, especially as we count down to the OPEC meeting next week?
Yes, I think I don't see any drastic or change in oil prices till the 25th of OPEC. I think the range $50 to $53, I think that is what we should see oil prices trading.
Research analyst at financial derivatives company Adimo Kwesa, thanks a lot for your time.
Thank you.